call this meeting to order of the Management Committee on November 8th today. We have the agenda before us. If there aren't any changes or any comments on the agenda, without objection, the agenda is approved. We then have the draft minutes from the October 25th Management Committee meeting. Everyone's had a chance to read through those. Are there any edits or changes? If not, I'd entertain a motion to approve.
Move approval.
Moved by Lilligren, is there a second? Seconded by Osmond. Any further discussion? Seeing none, all those in favor say aye.
Aye.
And those opposed no. And that passes unanimously. We'll now move on to our non-consent business items, and we've got 2023-264. It's our 2024 Authorized Financial Institutions, and we've got Mark Thompson, our Director of Treasury. So good to see you here again today, and we do these often.
Yes, good afternoon, Madam Chair, committee members. I'm here to present, business item 2023-264, which is the 2024 authorized list of financial institutions. And this is an annual business item we bring forward. Really, it's about transparency, and it's really a list of the financial institution relationships the council has. So this we bring it forward for a couple different reasons, I guess. One is transparency, and another is to fulfill two statutory regulations or requirements, and also a policy requirement. We are required by statute to designate our official depositories, which are our banks, our main banks, and also according to statute 118 A, which is the statute that dictates our investments and our internal investment policy, we're required to have prior approval for all the institutions we use for our investments. So that's what this list contains. It contains the institutions we are expecting to use in 2024 for our banking, our credit cards, and our investment related services. It contains seven different categories. As you can see, it's attached to the business item. It lists banking services, which are our main banks. It shows the banks that are in our CD program. It shows the credit card processors that are mainly used by Transit, but there's also the P-card programs, and some of our healthcare reimbursement account programs are in that category. In the custody and trust and escrow category, those are really our custodians for our investments, and State Street, for our OPEB trust, we also have a secondary custodian for that, and a clearing account we use for our hedging, so things like that. The security brokers are what we use to transact for our investment portfolios, as well as the money market funds are used within our investment portfolios, and of course the OPEB trust, which is administered by PARA and managed by the state board, is on this list also. So really no changes from last year's list. You can see one item has an asterisk under the card providers section and called NAICS Cashless Solutions, which is a system that Transit is using for their card vending machines. So we added that under the card processor category. And other than that, there's no other changes from the last time this was approved, which was actually early last year. The Thrive lens analysis for this is that the list helps the council meet the stewardship outcome by being transparent about its financial relationships and the fees paid to these institutions, demonstrating financial resources are being managed wisely. I briefly forgot to mention that also on this business item is a chart that gives transparency around the fees that we pay to these institutions. I'll be happy to answer any questions on that also. A little bit about the funding for each one of these. The banking fees are generally not paid. We have earnings credits that offset those. Merchant banking fees, those are in the transit systems budget. Purchasing card, it says a negative 120,000. That's because we actually receive a rebate based on our spend in that program. Custody, that's a standard fee that really hasn't changed for the number of years and will actually, might be slightly less than that because of a recent RFP we did that has a better pricing schedule. So these are estimated 23 fees. So bond funding, I know there's some trustee services. I expect that to remain the same as 23 into 24. And the escrow services, we really only use those if we do a bond refunding, which because of the change in interest rates, we don't expect to do that in 24. And the OPEB trust fees is a consistent number that usually stays the same each year. So Madam Chair, the proposed action is that the Metropolitan Council approve the list of 2024 authorized financial institutions.
All right, thank you, Mark. Are there any questions? Councilmember Cedarburg.
Not a question, just a comment. I realized that this was coming up today, and I really appreciate the neighborhood and smaller banks and the CD deposit program, because I'm looking at the list and I know somebody probably on every one of those banks who've helped really build community and really work with, nonprofits, lending, and it's really a way of including them in the Met Council because they really do a lot at their local level. So I just want to appreciate that whole stewardship and including them when you could just use the big players. So thank you.
Mark, do you want to tell her how we got there with those?
Well, I will talk, Madam Chair, committee members, a little more about the CD program in my next item.
Great.
Okay.
Yeah, that was some of our direction to move
Yeah,
forward in that
that's right.
direction.
Yeah.
Mark led the way, so we'll
Good
come back
lead
to
in,
that.
right?
Yeah.
But I was at a social event last week and like 9 of these people came up to me and said, when are we voting on this? So it was like.
Oh, okay.
That's good.
Yeah, this list isn't anything to do with procurement
Right.
processes. It's
Right.
just a transparent list,
Exactly.
Yeah.
as well as designating the depositories that statute passes to designate.
So,
Any other comments or questions? Seeing none, then we have a motion that is being proposed by the staff that the council approve the list of 2024 authorized financial institutions. Is there a motion? So moved by Osman, seconded by Cedarburg. Any other discussion? Seeing none, all those in favor say aye.
Aye.
And those opposed? And that passes unanimously, so thank you. And Mark, you're up on the next item as well. That's our quarterly investment review committee report.
Yes, thank you, Madam Chair. This is a quarterly informational presentation I do regarding our 3 investment portfolios, talking about performance and our holdings. And it's as you'll see in your materials, there's 5 or 6 slides at the beginning that are talking about the economy. And then there's 3 slides at the end that talk about each of our portfolios. And due to time, I'm going to skip over the economic slides. I'll just make a couple comments about the economy and then we'll jump to slide 6 in a moment. But just on the economy quickly, despite the Fed's aggressive tightening over the past 18 months, the economy is just, the economic strength continues to be very strong. In the third quarter, the GDP jumped up to 4.9%, which is double the second quarter and the highest in just under 2 years. So it was quite strong. Consumer spending, fueled by this continued strong labor market, really pushed that strength. The labor market was a little mixed during the quarter. We saw July and August, we saw some cooling in the labor market, and then September we had a huge jobs gain in September. Unemployment is still very low at 3.8%, and average hourly earnings are still high at over 4%. So it's the job market's kind of mixed because we actually, since this was put together, we've gotten October's labor market report, which was completely reverse of September. September was really strong, October was really weak. So yet to determine or yet to see where the labor market is really headed, but inflation continues to be stubborn. It was actually went up a little bit in the third quarter from 3% in May, or 3% in June to 3.7% in September. Really saw a lot of price pressure in the service sectors, which is travel, entertainment, leisure, those kind of things. The bond market saw a jump in yields. Short-term yields jumped a little bit because the Fed increased rates one more time in July. They've since passed on their September and November meetings and left rates steady. So they seem to be signaling that they may be done at raising interest rates, but the question is the strong growth and the stubborn inflation certainly doesn't take future hikes off the table, but the Fed speak is turning from continuing to raise rates to leaving rates higher for a longer period. So we'll have to see over the next few quarters where the Fed goes. But longer term rates jumped in the third quarter too, which we haven't seen for a while, providing some good opportunity for our portfolio, and I'll talk about that in a minute. And the equity markets, they've really had a strong year, strong earnings, corporate earnings, but in August and September we lost some of those gains back. So the stock market was down a little over 3% for the quarter, but it's still up over 7% for the year. So I'll jump to slide 6 if we can do that. Oh, I got it now. So this is a little information about our short-term portfolio, which is used to invest funds around our cash flow. So it's a very short portfolio, as you've heard before. Let me just grab my list here. You can see the holdings, how the portfolio is allocated on the left side of the screen. No real change from last quarter. We still have a large amount of money in the money market fund and discount notes and U.S. Treasury. So it's about a $1.3 billion portfolio. You can see how it's allocated out on the left side there. How it really didn't change from the second quarter. We have made some adjustments since this. We're decreasing the amount of money we have sitting in the money market fund because, as I mentioned, that this portfolio is really around our cash flow, and we've got some big debt payments coming up that will take $60 million out of this, as well as we're moving some money out of the money market fund to grab better yields in the discount notes and treasuries. So we'll see that change a little bit next quarter. Pretty straightforward though. The total return on the right, you can see that our total return was 1.33, which is right on top of the benchmark at 132. The best part is the average yield. You can see it was 5.35 for the quarter, which was up from 5.14 in the second quarter and 4.77 in the first. So the average yield in the portfolio continues to climb, and so does our interest income, as you can see in the last bullet there. On the right, the interest income was $15.2 million for the quarter, which was up from 11.9 last quarter and 10.8 in the first. And interesting note is our interest income this past quarter was higher than all of last year in this portfolio, so that the increase in rates has really benefited that portfolio. Next, I'll quickly touch on long term. So this is our longer term reserves. It's a longer horizon portfolio that's invested in a wider variety of securities. You can see the allocation again in the bar graph to the left. That it's invested in treasuries and agencies and munis, and we've got a little bit of mortgage backs, and it's about a $452 million portfolio. The only real difference from the second quarter to the third is that you can see the little green section, which was a money market fund, we've been accumulating funds in a money market fund for the past couple of weeks in anticipation of the CD programs. And we've, as you remember, back when the banking crisis was happening in March, April, May, we That was right about the time of most of our CDs were maturing, so we let them all mature and we didn't reinvest them. So we kind of wanted to see how the banking crisis was unfolding. And now we're of the opinion that we could start ramping this program back up, and we've set aside a little bit of money to get that started in the fourth quarter. So that's what we're looking to do is get some more money invested with those banks that you mentioned are in the fourth quarter, which, in the next month or so. So that's our plan. We're doing some research into the health of the community banking sector, talking to all the banks in our program to see what they're seeing in loan demand and deposits, and just kind of do some due diligence to make sure we're making the right decision. But all our CDs are collateralized and insured also, so we feel we have a backup there too. But the crisis seems to have settled down, and the banks, we're hearing from our banks that things have certainly changed for them. They've lost some deposits and they're fighting for deposits amongst each other, but they're not seeing a lot of deposits leave the sector. But their loan demand is certainly down, and they've got some earnings pressure. Their margins are tight, but I think at this point they're in need of our deposits, and I think they're healthy enough that we're not going to have any problems. So we're looking to get that ramped back up shortly. You can see the allocation on the bullet points here too. Like I said, not a lot of change besides that. And then our total return beat our benchmark, 0.469% versus our benchmark, which was negative at 0.595. Average yield jumped up a little bit. This portfolio struggles a little bit to convert over to the new rate environment because we don't have a lot of maturities to reinvest. But those are coming. We've got some new investment opportunities in December that 10% of this portfolio is going to roll over to a new higher rate. So I think that'll really see a bump in this coming. Our benchmark, our duration's always been short, which is kind of defensive, but it helps us as rates move this quarter. And the last bullet, third quarter interest was $1.46 million, which is very similar to the second quarter. The first quarter, it's a pretty stable portfolio with not a lot of activity until we get some maturities to reinvest. So that's the long term. The last one is OPEB. Negative return for the quarter, really driven by the stock market, which I mentioned was down a little over 3%. 59% of this portfolio is in the equity market, so that's why we have a little bit of a negative return. To still beat our benchmark, which was down over 3%. Our year-to-date return is still great, 8.85%, and our longer term averages are 7.15 for 5 years and 10%, almost 11% for 10 years. So we are doing great on that. And our funding's in a great position. We're still fully funded for our OPEB liabilities, and you can see the allocations here. We try to keep 60% or less in the equity exposure, and we finished the quarter at 59. And our fixed income was 37%, and our cash pool is at 4%. So this is still managed at the state board, but we direct the allocation. So despite the negative return there, we're still in a good position against our funding. So and we've seen some good performance since this was reported. So. And that's really all I have. Touching on each portfolio quickly, I'm happy to answer any questions, and I know I skipped the economic stuff, and if anybody wants to talk about it more, you can reach out to me. My information's on the presentation too. So I'm happy to answer any more questions.
Thank you. Are there any questions? Any further discussion or questions? Well, thank you, Mark, for keeping your eagle eye on all of this and keeping us updated. We've been through a lot. Well, the economy takes all the twists and turns over its inception, but it's been a lot lately, and having you come onto the council has been very significant for us. So we appreciate all your hard work.
Well, thank you. I'm happy to do it, and like I said, if anybody has any questions, I know I went fast. So, and this information was all reviewed with the Investment Review Committee yesterday. So.
Okay, thank you. I appreciate that. Councilmember Pacheco chairs that, so that's a great asset to bring into this committee too, so thank you for that. All right then, seeing no other questions on this information item, we'll move on to our second information item, and that is Procurement and Office of Equity and Equal Opportunity. It's our quarterly review, so we'll be bringing up Jody Jacoby, our Procurement Director, and Ashanti Payne, Office of Equity and Equal Opportunity, our Assistant Director. So thank you to both of you. It's nice to see you again on the regular, so it's pretty great. So I'll turn it over to you to present your information.
Good afternoon, Chair. Thank you for the warm welcome. My name is Jody Jacoby. I'm the Chief Procurement Officer, and with me today is Ashanti Payne, Assistant Director of the Office of Equity and Equal Opportunity. And as the Chair mentioned, we're here to present to you today as an information item the third quarter procurement actual contracts and purchase orders that have been executed, along with our utilization with MCUP. The Council's expenditure policy 14-2 for the procurement of goods and services authorized the regional administrator to approve awards not exceeding $500,000 for goods and services and construction not exceeding $10 million, which is within the adopted capital budget where the cost is within 10% of the engineer's estimate. And you've seen these contracts come through your committees as individual business items, and as such, they need to be independently reviewed and approved. And the information that you have before you today, again, you've seen this before, and it's grouped by value and procurement type. And it contains a list of procurements that are greater than $175,000. And that value is significant and notable because that's the value that statutorily we need to publish these contracts individually and advertise them. And we do that through the Council's Doing Business contracting page. And I'll start with each quarter to review the procurement summary, and then I'll transition to Ashanti to take a deeper dive into what happened this quarter with MCUBs and a breakdown. But on the first page behind the information item sheet, you see the procurement summary information. And again, this is really standard that you see each quarter, and it just tells a little bit more about the work. And so while the number of procurement transactions were slightly lower for third quarter, because every quarter is a little bit different, depending on what our need is and what we're buying, there were still a lot of transactions. In fact, 7,940 individual transactions. And those take the place or the form of a purchasing card, a purchase order, a request for a quote, maybe a proposal, or even a construction bid. That is a little bit less than we've seen previous quarters. 96% of the transactions are less than $10,000. And then 83%, the pie chart in the bottom right-hand corner, recognizes that 83% of those procurements had a value that exceeded $175,000. Again, that's the value which we formally advertise. And year to year, quarter to quarter, it varies. Third quarter is typically a little bit lower. And so although it was a slightly less than last year, it's really nothing notable as each quarter is independent. What is interesting and what you'll see as you're looking through pages 2 through 10 with each contract by contract type, one of the columns that we've added, or two of the columns in the last few years, is the DBE and the MCUB goal, and then the actual commitment. The goal is what's set by the Office of Equity and Equal Opportunity, included with the solicitation documents, and either the contractor or consultant includes it with their proposal. The commitment is the final number that's agreed to and included with the contract. And again, this quarter, like most quarters, we saw a few percentage points over what the actual goal was. And it may seem insignificant with a few percentage points, but in third quarter alone, the delta between the goal and the commitment was just over $490,000. And the year-to-date commitment from the goal to the commitment realized was over $5.1 million. And so that's showing really good trend and progress. Additionally, the MCUB direct spend, and that's where a micro purchase, if you're using local dollars, you can direct select a MCUB vendor. The percentage of purchase orders issued to a MCUB was the highest that we've seen. It was 23% since we implemented the micro purchase increase for MCUBs. And we've seen a really positive trend since that program was implemented back in 2019, where the first year it was around 3 to 4%. In 2020, it ranged about 8%, 2021, around 12%, 2022, around 16%, and then 2023, we've seen 14%, 19%, and this quarter, 23%. So that's really showing some behavioral changes, not just procurement, even though it's a procurement number. Definitely it's the work of OEO and our business units. So that's something really significant to point out. Additionally, a couple partnerships, and that was attached, I believe, as the last slide of the information item. We just finished our first year with New Flyer out of St. Cloud, who distributes a lot of bus parts, and they've contracted with an MCUB in their area. And in the first year, there were 377 purchase orders issued, totaling over $963,000. And we just started a partnership with Gillig in September. The MCUB vendor they're working with is MA Associates, and we're really excited to see where that program takes us and how that continues to contribute toward our utilization. A couple other initiatives in procurement I'm excited to share before I transition to Ashanti is within the last year we've implemented Ask Procurement trainings. Some of you have even attended. And this year, this quarter, we had 7 different training topics. And this year to date, we've had over 920 employees attending this training. And so some really good success, and we continue to update those programs, and we're already thinking about refreshing them and adding a new slate for 2024. And then finally, I'm really proud to report the work of our team. In August, the procurement department received national accreditation as a quality public procurement department through the National Institute of Public Procurement. And this National Institute has 3,000 members throughout the United States and Canada, and only 167 of those agencies have qualified and been certified with this distinction. So again, it's work of the team, and I'm really proud to share that and also have that award just as a distinction of some of the progress and the success that we've worked on together.
Well done.
That's great. Thank you.
Transition to Ashanti.
Thank you, Jody. I am going to present and break down the MCUB participation for Q3.
And Ashanti, can you just tell us what page of the report you're on so we can follow along?
Yes, this starts on page 11.
Okay, great. Thank you.
And on page 11, it breaks down the total MCUB commitments for construction and contracted services for Q3. And you will see that we had 0 commitments in percent MCUB participation on construction and contracted services for Q3. There are some key reasons why we had 0. First being that the Office of Equity and Equal Opportunity only established an MCUB goal on one project during Q3, and that project was cleared by the Office of Equity and Equal Opportunity on good faith effort and awarded on good faith effort. And I point that out for a couple reasons. One is we don't often get a chance, the opportunity to talk about good faith efforts because fortunately it is a rarity. It doesn't happen a lot. However, you would be surprised how many internally and externally believe that this is a quota system and that projects, and what happens if bidders and proposers don't meet the goal, what happens? So it is an opportunity for us to talk about that aspect of the program in the good faith efforts. Second, there were several on my team asking, how did I find this? Because really I was like, there can't be zero commitments for Q3. So I did a deep dive and started looking and to see what went on. So again, a lot of this and a lot of our work is manual, and we have to rely on those manual processes. The other reasons are we had a lot of projects where we don't set goals on them, that were either administered through sole source or emergency declaration, cooperative agreements. And the thing that I will say about that, prior to the first of the year, this year, we would have excluded sole source and emergency contracts from our count, and you wouldn't have saw those. But this year we made that change because, again, sole source, the reasons that we utilize sole source also could apply to an MCUB. Emergency declarations, those as well can be awarded to MCUBs, and we have had examples in the past where those have happened. And as Jody mentioned, though we only set that one goal and we didn't get participation, there were a number of projects where that were federally funded, where we did have DB goals, where the goal was exceeded and achieved. And I also mentioned that it doesn't mean as well that we won't hit our overall goal for the year end for a 14%. And continue with that trend that's on page 12 of increasing our level of commitments to MCUBs over the last 3 years. And we are looking and optimistic that we will keep that trend of moving forward. I would also point to the example, just as a spoiler alert, because we're coming back to present our DB report. Some of you may remember we had a very low DBE first half of 6.5%, which is the lowest I've seen. However, I'm not going to mention the percentage yet, but we met our goal, we exceeded our goal. I'll leave it at that and save the rest for that presentation. Moving on to page 13 of the report, in payments that went to MCUBs, both from payments and P-card, in comparison to Q3 of last year, it's up. Payments to MCUBs are up 62%. And then towards the bottom of that page, looking at P-cards, we're at 5.6%, which is short of our 10% goal. And we're down from 6% from last quarter. I will point out that MCES had Environmental Services has consistently been at or above the goal for MCUB spend, and they are again this quarter. Last quarter, Metropolitan Transportation Services was at the goal, but they're down 0.6%. And I'm going to take credit for this in creating this competition because there was a lot of questions after my presentation last quarter. CD, Community Development, is at 17.6% for this quarter. and they were, I think, around 2% or less last quarter. So I'm just gonna say that they saw this and took action, and I think that is a big jump.
So the competitive people are
I hope so.
all in
I hope
community
so.
development, okay?
If I hope they're competitive like I am, so. So that hopefully they'll see this and want to also join in the fray. Moving on to page 14, this kind of breaks down the demographic information relative to payments to MCUBs. What I will point out is that they're definitely, we're maintaining a trend of seeing more equity and more equitable distribution of payments to MCUBs relative to race and gender, and also the utilization of unique firms as well. And on the last page, page 15, Jody did mention about the MCUB partnership with New Flyer. We will continue to report on that success, and looking forward to sharing information about this newly formed partnership with Gillick and MA Associates. MCUB direct spend, again, Jody, I think, mentioned this as well, continues to go up. The micro purchases of up to $25K continues to go in the right direction. We had emergency declaration MCUB spend of $62,000 with Pride Cleanup and MCUB preference. MCUB preference is 6% bid preference is giving to MCUB bidders and proposers, and we had some successes there as well. JL Tice for concrete, a contract for outdoor cameras and camera equipment, and then a public arts project that had 11% goal but had 100% commitment. MCUB incentive success, if you recall, we utilized some, I always get this wrong, so hopefully Cy will, Director Jordan will perhaps correct me. I think that's the first time I've ever called her Director Jordan. MCUB with Thrive Equity Funds to utilize to incentivize bidders and contractors for going above and beyond the MCUB goal. And of course, we wait until after those projects are closed to verify the payments to those businesses. And we had our first project close, and it was overhead door replacement contract, had a 15% MCUB goal. The commitment was 22.4%, and they actually achieved 25.4%. And that's an additional $129,216.23 on that project to MCUB firms. And with that, we will rest for any questions.
All right, thank you very much. Are there any questions? Councilmember Cedarberg.
Thank you, Madam Chair. Ashanti, I appreciate the competitiveness and the measuring. I'm an engineer, so we can't improve unless we track, measure, report. And so I really appreciate that. And it kind of, that comment folds back into the hunting you had to do to get the information on some of the information. And it seems like that's probably a request in your systems to be able to be tracking that, so you'll be able to pull that out more easily. And I know, you know, your technology services are hiring people and it's hard to do, but as far as tracking and reporting, and that probably should be something that should be easy to find that you were hunting for last time, you know, that you said you were hunting for. So I would suggest that we put a request in to make sure the information you need can quickly be found. But I certainly appreciate the tracking, the reporting, the sharing, the transparency, and the competitiveness. So thank you.
Thank you.
Yeah,
Councilmember
Mr. Chair,
Lilligren.
and Ashanti, I didn't know if you had a response, because we've had this conversation before about how difficult this data is to find and to mine, and I thought we had had conversations about some systemic improvements so that it was more transparent. So I didn't know if you had a response or a comment for Councilmember Cedarburg, but I do have a question as well.
Madam Chair, council members, yes, that is something that we are working on. It is a struggle. A lot of what we do is manual. We do not have a system where we can, our team can perform the work and work tasks in a system as a source of record. And so we are dependent upon staff people taking their files and then entering that information into the procurement system. And then even still, that would have alerted me to that there was a goal, but why did we get 0? I still would have had to look, but at least it would have made it easier. So we are definitely, we have made some requests for funding to address this as well. For 2024, it's in the 2024 budget. And then also trying to work to automate some of the processes that we can in the immediate time.
I'll just add on to that, Madam Chair, council members, absolutely system. We, like all of our colleagues here at the council, think people, process, systems. And even just to generate this report, we have a Power App, but it's pulling from 6 different systems. And one of the large technology projects that the council is investing in, part of BPSI, there's a procurement system. And right now we actually have 2 procurement systems. And so it'll be bringing them into our ERP so we can get to encumbrance accounting and fold in all of the reporting and not have sort of a different system for each initiation. We'll be able to track it from initiation to contract management. That's something that many people are working on. So there is hope. There's a lot of hope and there's a lot of resources to having it be more efficient and definitely transparent and accountable.
Thank you, I appreciate that. I just really want to lift up what Councilmember Cedarburg was saying, and I think you have this committee's support and the council's support in those efforts. And I don't know what contract or what project was given the pass for the good faith effort, and I get that and everything, but I do know from serving on the Green Line Corridor Management Committee, we had a co-presentation from the state and from Met Council about our participation goals, and I thought that was very interesting. And so it just makes me wonder if there aren't other agency resources outside of Met Council that can support what we're trying to do here. I don't expect a response to that. I don't really 100% even know what I'm talking about, but I just have a sense, I have kind of an operating rule of always trying to use other people's resources. So it just made me think of that. But the thing I did want to ask about, and Ashanti, I really appreciate you taking credit for some of the increase within community development, and it is an impressive increase quarter over quarter. And I'm just wondering if you're taking some time. There's the competitive spirit, and then there's the steps that were taken to achieve that much higher participation percentage. And so I'm just wondering if you're digging a little deeper into that to see what some of the concrete steps were to achieve that.
Madam Chair, Councilmember Lugren, we are doing several things. I think I mentioned before that P-card spend is a place where we've seen we're not hitting our mark with the goal that we set. So one is trying to figure out that piece. What can we do better? What can we do in terms of, and part of that is the training that we partnered with. Because that is a place where we do have a lot of room to be intentional in our efforts with MCUBs. The other part is, again, this is probably the one area where we have the best in terms of reporting systems in the data. But we actually are looking a deeper dive into that as well. And it's going to probably roll out some changes for Q1 for starting the beginning of 2024. And directly to your question, I haven't talked to the folks at Community Development to see any best practices that they implemented to make that jump, but that is definitely a recommendation that we will take.
Thank you, thanks, Madam Chair.
Yeah, for sure. Are there any other questions? All right, thank you for this very great report. Appreciate just the nuances that go into this for us to kind of understand, you know, which direction we're headed, and I appreciate again all of your efforts and can't wait for that preview you gave us for the news that's coming. So, and we'll have a great item on tonight's regular council agenda too that we'll be reporting out that we looked at a meeting or two ago. So, be seeing more praises for you. So, appreciate your hard work and everybody at the council who's working with you to get this done. It's a team effort and great job. Thank you.
Thank you.
All right, we have no other information items on the agenda, which brings us to the section of the agenda where we will entertain a motion to close our meeting for labor discussion. Councilmember Cedarberg, do you have a motion for me?
I do, Madam Chair, I move to close this meeting under section 13D03, subdivision 1 of the Minnesota statutes, so we can consider a labor, development, and negotiation related to labor strategies.
Is there a second?
Second.
Seconded by Lilligren. Just again, the governing body of a public employer by majority vote in a public meeting may decide to hold a closed meeting under the provisions of section 13D.03 subdivision 1B of Minnesota statutes. Discussion at a meeting closed under this law must be confined to labor negotiations, strategies, developments, and or discussion and review of labor proposals. The proceedings of a meeting closed under this law will be tape recorded, preserved for 2 years, and be made available to the public as provided by law. With that, let's take a vote on the motion. All those in favor say aye.
Aye.
Those opposed, no, and that passes. Again, before we close the meeting to discuss labor strategies, I'd like to inform members of the public who are monitoring this meeting for the record that the committee will adjourn immediately after the discussion of this information item, and that the committee will not have any discussions or conduct business on anything after the information item is complete. So for the record, please note that this meeting was closed to the public at 3:18 on November 8th. And we will wait until we